my Ethereum and my Bitcoin have gone down a little bit.
Mark, is your conviction on crypto shaken, or are you going to hang out with us during the bear market?
No, it's not at all. It's not shaking at all. I mean, I think this is a good thing. It's painful to lose the money, right? But it's really, really good because, one of my favorite sayings is first there's the innovators, then there's the imitators, then there's the idiots. And what's been happening in crypto over the past 18 months, or actually the past 6 months, I should say, is when something worked on Ethereum, then it went to an L2 of Ethereum. So you saw DeFi go from Ethereum, it's too slow, it's too expensive. So then you go to an L2 of Ethereum. Well, it's cheaper now. That's a good thing, right? Then it went to another chain and the same, and then another chain and another chain and another chain. Sounds like a song. It sounds like something DJ Khaled would do. And another chain and another chain. I was around in 2017, but I think this is a lot. There's some similarities, but there's a lot of differences. In the ICO craze, and the first real push of Bitcoin, that's where you started to get the early interest, but there weren't a lot of mainstream applications. There were companies trying to do some things with smart contracts, CryptoKitties among them, and there were a lot of different ICO type approaches, but nothing really was already mainstream, and that was the big difference. It was just about people getting into crypto, not crypto getting into people's lives. There's an old saying, everybody's a genius in a bull market. And so when everything was going up, everybody was smart, right? And when everybody's smart, everybody thinks they can do anything and not lose money. And then that obviously changed multiple times, over the past 15, 16 months. And so now, I continue to look for applications. So what's really changed over the past 15 months is, we were looking at DeFi. There was the DeFi summer, then there's DeFi, and but there was really DeFi on just a couple blockchains, right? Mostly Ethereum is where all the action was. I've said before that this is a lot like the early days of the internet, and when we went, 95, 94, 95. My company, we started streaming. We were the first company to do, commercial streaming and this and that. And it was a race because the next thing you know, there are 20 companies, 30 companies, 40 companies trying to do streaming. And, 39 of them died or 35 of them died. And you saw the same thing. And then when the 2000 and 2001 hit and the bubble burst, 95% of companies were gone. But the ones that were able to survive are still crushing it today, the Amazons, et cetera, Google, et cetera, because they had good, valid business models. And that's what we're going to see right now with crypto. Crypto, has got a lot of things that it can do really, really, really well. But we've seen all the money and brain power really geared towards DeFi and NFTs. And for 99% of those apps, it's a waste of brain power. Crypto's the same thing, right? There's got to be a reason for regular people to want to use an application. It's like, why did you go to the App Store for the first time to download your first app, whether it was on an Android or it was on an iPhone? There had to be a reason. You could have just used the default applications, but there was something else you wanted to do, whether it was Snapchat or whatever. Why are 90% of the apps on your phone unused, but you downloaded them, right? Why do you just use the 10%? Crypto's the exact same way. There is no difference.
Like, we got inflation that's 8.6%, man. We're headed towards a recession. Like, what does all of this mean?
I don't think it really means much in terms of crypto unless there's an application. So we can go both ways. So first of all, look at the stock market. It's gotten tech stocks in particular, high growth tech stocks have gotten torched even worse than crypto, right? Yep. I got tech stocks worth down a whole lot more than my Ethereum or my Bitcoin, or my Polygon, right? They just gotten torched. Why is that? Because it went too high. When interest rates are basically negative and you can get as much capital as you need, or some people can get as much capital as they need to go out and buy stocks thinking they're going to go up. Why wouldn't they? You're borrowing at, let's say, 1%. And do you believe stocks will go up 1%? Sure. So yeah, it was $50 a year ago, but it's $300 today. So what? Everybody's doing it. It keeps on going up. Why would it go down? Well, you get to the point where it's just too damn high. Just because it's down 80 or 90% doesn't mean it's mispriced today. It may mean that it was mispriced last year. And with a lot of this, that's what it was. The money was so easy, it was so available that prices went too high. And it may well be that even though we're down, enormously, that we're in the right place in terms of pricing, and we're finding the right place. And the problem isn't now, the problem was last year in the easy money. And so to your point, in terms of inflation, I don't necessarily think crypto isn't impacted any more or less than anything else. And it's not going to change what people do any more or less, right? Now, I'll say that if interest rates keep on going up, and that's translated into savings accounts that, and all of a sudden you can get a 6-month CD for 4, 5, 6%, or something tax-free for 4, 5, 6%, that's going to impact people's decisions, because you go from, okay, I might be able to make some money in crypto last year, and I can make my 10% on my USDC last year, right? And that seemed to be relatively safe, where I'm willing to take more risk, to, hey, I don't have to fuck around and I can make 5% on this CD. That will impact the money that comes into crypto and stocks, for that matter. Then there's the Bitcoin maxi side of it. With the Bitcoin, Bitcoin, that's a hedge against inflation. Yeah, I don't see that working. I always analogize Bitcoin as it's a better version of gold. It's a digital version of gold, and I truly believe that. And all the gold maxis think it's a hedge to inflation. Yeah, not so much. If that were the case, gold wouldn't be where 17,000, 18,000, wherever it's at, it would be 30,000, And so there was a lot of hope that Bitcoin would do this or that. Now, where Bitcoin and gold do offer a hedge is in countries that are not reserve currencies. No, it lasts until there's a catalyst. And that catalyst is going to be an application, or we get so low, people go, fuck it, I'll buy some.
I'm almost there. Are you there? Are you there?
It's like stocks, right? I look at stocks and I'll look at the market cap. I'm like, is Amazon, I own a bunch of Amazon, but should I buy more Amazon? It's $1 trillion market cap. That's not a fucking price, right? There's some other companies where you look at it and they're like, it's a $250 market cap, plus some debt now because they borrow cheap. I'm like, if this were coming public, if this were being pitched to me as a private company at this valuation on Shark Tank, would I invest in it? And if the answer is yes, I'll buy it, right? And if you think back, whether it's Bitcoin, Ethereum, Polygon, Matic, ICP, any of them, or even the new ones like Ape, and you look at the market caps and you see it's $1 billion plus market cap, or 6 billion or 8 billion or 40 billion, you don't look at that and go, that's cheap. Because if you remember back to, DeFi summer, these things were selling for less than a penny, and their market caps were in the hundreds of millions. And then you look at some things like ALCX, and you look at what are some of the others that are DeFi, Uniswap or SushiSwap, rather, and even Uniswap, particularly SushiSwap, it's got like a $250 million market cap. And then you look to say, why is that relatively cheap, right, compared to everything else? Well, because there's no utility there. You get paid it if you're an LP, but then what? Who's going to buy it from you? What's the reason to buy it from you?